Hello everyone and welcome back to Trading Academy's Market Structure Series. This is part 5 where we will start to examine support and resistance. I am your presenter and guide through this, Unitrader. Before we begin, quick disclaimer, this is not financial advice nor am I a financial advisor. Please protect yourself and be safe. Alright, real quick before we get into the charts, we're just going to explain here there's really two types of support and resistance. All right, we've got dynamic and static. All right, when we're looking at static support, we're going to be looking really at the market structure and the chart using pivots. All right, and we're going to start mapping out horizontal levels. So that's one way to think about it. The static are more horizontal levels, and the dynamic support and resistance, you're going to be incorporating indicators such as EMAs, SMAs, VWAPs, etc. So if we think about that, static support lines are very important, not lines, they're zones, sorry. It's very important for markets that tend to range. And the dynamic support and resistance are going to be very useful in markets that are trending, or markets, for example, the NASDAQ tends to really trend quite a lot. So you're not going to be able to use the static support and resistance as much as you would be, for example, on a Forex pair or Bitcoin. All right, so we'll look at both of them, but we're really going to be focusing more on the static support and resistance. Let's get at it. So taking a look at the Bitcoin 4-hour chart, we can see that price really starts to, aggressively push to the upside. So once we start to hit all-time high levels and get above, there's really no history here for us to find any sort of resistance or support until price starts creating a consolidation here. So in these cases, you're going to be looking for your EMAs, all right, or your VWAPs, or however it is that you like to trade. All right, so this is a hodgepodge here of EMAs, and we can see these are some of the more popular EMAs, the 100, the 200, the 50, the 21, and the 13 EMA. All right, so if you go to your indicators, it's your moving average exponential, that's the EMA, moving average exponential, all right, and then you would go into your settings tab and muck about with your settings, change the lengths. The default comes on 9, which is also a very popular EMA. You can add whatever you want in terms of EMAs. Sorry, I'll put that back up. But these are very common EMAs. A lot of people use them. All right, so you can see that once price really starts getting away from here, there's not much that you can chart out here as a horizontal level that's going to give you any support. So we're looking for EMAs, SMAs, VWAPs again, any sort of dynamic indicator that is going to fan out. It can be channels of some sort, Bollinger Bands, all kinds of things. All right. So you can see that price does respect them quite a bit, especially the 13 and the 21 here so far. But it will come down to the 50. It will go down to the 100 and the 200 eventually. They will be hit. We can see here when the price really starts to get up here to 73, then it pulls back and actually does hit that 200 perfectly. All right, so those are the dynamic concepts in a nutshell, but we're really not here to focus on those. What we want now is to focus on this bit of price action here. All right, once price gets up here, you can see that at first there's really not much to go on about here, but as soon as it starts moving away and creating this consolidation, we can start marking out certain levels here. So what we're going to be looking for is points on the chart where there has been a lot of pushes into and rejections, and also pushes down and support. All right, so finding resistance here and support here, obviously. So it's very subjective how you mark these out. We're on the 4-hour chart. I like to mark out my levels on the 4-hour chart. Before I say that, let us say that we've just come into this consolidation here and there really isn't that much information. Then you're going to be wanting to move down to lower time frames just to start giving yourself a bit of an idea. All right, so perhaps something like this. We were on the 1-hour chart. You can obviously see here that we're getting support in this zone. Something like this, maybe like a little bit higher up. We've got a wick down, 2, 3, 4, 5 touches to this point down here, and it holds and pushes away. Now we've got 3 rejections here, so we would be looking to mark this out, something like so. And then as price starts to develop in here and we start to get more and more time put in, we can start to look out onto the higher time frames. So on the 4-hour, it doesn't look like there's much here, but there is quite a bit of information. And again, we're going to just do the same process here. All right, so here's the high, and it would have to look something like this. It would be a wick to a body. Here you've got 1, 2, 3, 4, 5, 6 rejections off of this level. And then we have a base here at least that we can start looking for some sort of support. Okay, so this would be the ceiling and the floor here of your support and resistance. And then as price starts pushing out of it, we can see that it comes back in and holds. So this is an obvious point of interest because we've now put in a pivot high. So I generally tend to mark out the wicks right away, and then when price starts to form levels like this, I would potentially look to mark those out as well. All right, now this is very subjective, right? So you'll see people will have different levels, and that's fine. And if you're having problems marking these levels out or understanding, the wicks are getting too confusing, there's too much stuff going on here, it's too noisy, then change your chart type. All right, so you could maybe look at a Renko chart. Definitely don't want that setting. Okay, so you could look at a chart that really clears out the noise, and you could pick off the tops and any area where you find some sort of support here. So you see how different it looks already. These lines don't seem to be working out very well, but it would be, something like that, something like this. You would definitely want to mark out your top. Always be marking out your tops. Here we've definitely got some interesting development here. Let's take a peek back at normal candles and see how that works out. All right, so these ones that we've marked out here, I mean, look at that. It's quite lovely. And again, you're cutting out a bunch of the noise. Very nice. Very nice. All right, one of my favorites is actually the line chart. So let's just get rid of that. And use the line chart. So now you don't have to contend with all the wicks and trying to figure out, what's going on here. So we have a push up here. I would mark out those 2 highs. I would also mark out this low to this low. When you get that big reversal up here, you've definitely got to mark out a high there. That's a huge zone. So I would mark out something like this after price had come into it. We do have this potential zone right here, so support, support. And then here you also have something is happening here. Let's take a peek at what that looks like now on normal candles. Right, so you can see once again it does work out pretty well, and you can move down time frames and see if you can find some better levels on the 1 hour chart and whatnot. All right, so let's move this down now to the 15-minute chart and just see if these levels are making any kind of sense here. All right, so you can see they actually do hold up pretty well. There is this level here that there's something there as well. Let's take a peek on our line chart again here and see if we can spot that. All right, so yeah, you've got a high here, a high here. So I might get rid of this line here. That might make more sense to have this one. Let's take a peek back out at the candle chart. Oh, did not want to do that. So yeah, that looks a little bit better to me. You've now got this zone here. Everything looks pretty decent there. So you can adjust these as price is moving along. There are little nuances and tricks that you will learn as you apply these. All right, and then again, you're not looking to just trade off of these blindly. All right, so let's say, for example, this is a very obvious sort of reaction here to this zone. Huge wick, and you have a shaved top here on this sort of pseudo hammer. It is a hammer, but not a great looking hammer, but it does have a shaved top. This is a very strong reaction, and it's a great signal. So what a lot of people will do on these is, and I can't really blame them, I don't do it, but to each his own. Trading is a business of preferences. So let's say here I've got mine marked out for this range here. I'll just pop them up. Okay, so let's say price comes to your level. You've got these marked out on the 4-hour chart, all right? And Bitcoin is moving quite aggressively, so you're not going to be looking to trade these on the 4-hour. You're going to come down, let's say, to the 15-minute chart, or maybe the 1-hour. Price, all right, we've established this zone back here. Price comes into the zone, hits, you get that first candle turn bullish, and that would be where people would be entering. All right, and then you would put your stop loss below the zone, and you see how you would have got some drawdown there, but eventually it would have gone your way. Or you can wait for price to come in deeper to the zone. Once again, here you get a great reaction candle, a little tiny candle. But most people will wait for a confirmation candle of some sort. So just looking for a good green candle. All right. So again, you don't want to just take it on the first green candle. You want to make sure it's a relatively decent looking green candle. Here, this is your first really nice looking candle. It's a little bit on the scary side with all that potential drawdown, and you're already starting to build up some potential resistance levels here. So you can do this using our market structure concepts from our previous videos, right? So here's your big signal candle here. And what do you have here? You leave a big fair value gap. You can wait for price to come back in, fill in the gap, or turn around off the gap, and you would get a much better entry that way. Again, your stop loss would still have to go below your first take profit. You'd be looking to target this resistance zone here. All right, and then if price can get above it and start to put in some great signals, you can look to add to that trade. All right. Pardon me. What I would suggest is if you've got a range like this with a obvious support at the low and a obvious support at the high, wait for those. There's no need to trade all of this stuff. This is trading in the middle of this range. It's not the best idea, right? Wait for price to come down, take it. Wait for price to come up, take the short. Now we see prices just sort of ranging around in here. Now that doesn't mean you can't get in here, but you really have to be careful. Let's say a move like this, price comes into this support zone, and you get this great bullish engulfing candle. That's, not a bad time to look for to maybe trade it up to this resistance level or this high. All right, so everything below is support, everything above is resistance. All right, so we bounce off support, we get through resistance, we come back, test this as support, but it ends up failing, and now again we could draw that out as resistance. So that's about it. It's pretty straightforward, but it does take some getting used to marking out these levels. So again, it's just practice, practice, practice. As you see price developing, start marking out levels. Like this is a pretty good looking level on the 15-minute chart, but if we went on the 4-hour, this is very wicky, right? Lots of wicks, so not the kind of level I would be looking to mark out. Much easier on the line chart or on a Renko chart, maybe even a Heikin Ashi chart. However you want to mark them out, do it. But remember that you've got to have some sort of confirmation off of trading this stuff. You can even go down on the much lower time frames, which is generally what I like to do. So if you go down on a 3-minute chart, you've got something like this. We break this, and then we get a nice hammer candle here, and then we get a bullish engulfing candle, and then you get a 3-bar break here. So that's a great entry candle right there. This is not bad, but now you're below this zone, so you've just potentially come through support, and it might flip to resistance. All right. When price comes back to it, it's sort of the same thing, right? You're always just looking for those great signal candles. So price comes into the zone, puts in a low, starts pushing away. There's nothing great looking here. Pushes back in, takes out the previous low, and then you get your bullish engulfing. That's your signal. Down here, same thing, bullish engulfing. That's your signal. All right, so always be waiting, be patient, watch the reaction. If you just get in on these for no reason, you're going to feel some pain, which might not be a bad thing as long as you've got a reasonable stop loss and you're practicing good risk management. But I would highly recommend you wait for reactions, all right? So that is support and resistance in a nutshell, all right? When price is really moving away, you're not really going to be able to find these zones here to trade. For example, something like this here, we've come up, we get a pullback here. So you can start to map stuff out in here, but it quickly just goes away from it, right? So these are those sorts of situations where you're going to be thinking about this on much lower time frames. This is a 3-minute chart, right? So the levels aren't going to be as valuable, but they're still there. If you're looking at this on a 1-hour chart or a 4-hour chart, there's nothing here. So price, as it's trending aggressively away, you definitely want to be down on lower time frames. You want to be looking at your EMAs. You can start to find these sorts of moves here, but on much lower time frames. So again, we come up, put in the high, we get the pullback. You can mark something out like this. Price breaks above, and now you start to bounce off of this support level. This is a very nice bullish candle here. That might be your signal. This is also a pretty nice bullish candle here. It's definitely engulfing, and also it looks like a little bit of train tracks, but I don't like the delivery of it. Yeah, that's a bit of a iffy one. But if we go down on a lower time frame, even you might find on the 1 minute it's giving you that bullish engulfing that you need. So practice it, move in and out, always zooming in and out. All right, I try to again establish these levels on a higher time frame and then trade them on the lower time frame. If you like this content, please leave a like and a subscribe. Leave a comment. If you don't like it, call me bad names. Join our Discord service. Description will be in the the link will be in the description. Pardon me. And that is about it. Very simple things, but it takes some use to. You got to practice it. You got to get used to it. You know, I understand that it's not the easiest thing to just start mapping stuff out. All right, but it's the best way to do it. Just start mapping it out, and then you will soon see that you're getting better at it. You're getting better at it, and that these things actually hold. Then you need some sort of confirmation. All right. Also, you can use momentum indicators, all kinds of tools that you can use in these zones to better your chances of a successful trade. All right. So that's going to be it. Hope you all stay safe, be well, and I will see you on the next one.